Ever pondered over the intricate financial workings of a Japanese e-commerce behemoth such as Rakuten? A dynamic powerhouse with diversified operations in e-commerce, digital content, communications, and fintech, Rakuten has been steadily expanding its global footprint. So how does a corporation as vast as Rakuten manage its funds for continuous growth, strategic acquisitions, or streamlining its existing debt? The key component to unlocking this puzzle lies in its use of a financial instrument known as bonds. In essence, bonds are debt securities, which corporations like Rakuten issue to raise capital. They serve as an integral part of Rakuten's financial strategy, providing the corporation with the necessary liquidity for its various ventures and endeavors. Today, we delve deeper to understand Rakuten's bond issuances, examining the associated risks, recent issuances, and the bond ratings. In the bigger picture, bonds also play a pivotal role in the global economy, forming an integral part of the market. This market, a crucial segment of the financial markets, is where participants issue or buy debt securities, essentially allowing companies like Rakuten to finance their operations or refinance their existing debt. As we navigate Rakuten's bond strategy, we will also give you a brief overview of the bond market, shedding light on its significance and workings. Transition, fade out. As we move forward, we will be delving into the specifics of how bonds work to facilitate the operations of such a multifaceted corporation. Stay tuned. Rakuten, a diverse entity with a foot in e-commerce, fintech, mobile network operations, and digital content, is no stranger to issuing bonds. Just this past January, in 2024, Rakuten announced the issuance of US dollar-denominated senior notes, along with a tender offer for existing USD and JPY-denominated bonds. This is a common strategy for companies to manage their debt profile. Fade out, fade in. Now let's delve into more details about Rakuten's financial strategies. Like any financial instrument, Rakuten's bonds come with their set of risks. Market risk, for instance, comes in two forms. Interest rate risk, where rising interest rates make Rakuten's bonds less attractive in comparison to newer, higher-yielding bonds. Then there's currency risk, where fluctuations between the USD and JPY can impact Rakuten's debt repayment obligations. Digging deeper, we find business and operational risks. The global competition Rakuten faces in its e-commerce and mobile businesses could pressure its margins and repayment ability. Expansion and investment risk is another factor, where ventures or acquisitions may not yield expected results, impacting earnings and, by extension, debt repayment ability. Lastly, we have financial risk. Rakuten's significant debt accumulation limits its financial flexibility, making it difficult to obtain further financing at favorable rates. Inconsistent profitability is another facet to consider, as investors need to assess whether Rakuten's cash generation can cover its debt obligations over time. Scene transition. Now, let's move on to discuss the potential rewards of investing in Rakuten's bonds. Rakuten's bond ratings hover around the BB category by major rating agencies like S&P and Moody's. This places them in the speculative or junk grade, indicating a higher risk of default. Fade to black. A moment of silence before the next scene begins. When considering Rakuten's bonds, it's crucial to understand specific bond terms, the company's outlook, and market sentiment. Each bond issuance has specific terms including interest rates, maturity dates, and covenants, which influence the risk profile. Rakuten's future strategy, market expectations, and financial guidance are also key to understanding the potential impact on the bond's risk. Lastly, general market sentiment towards emerging market companies, the Japanese economy, and higher-risk bonds also plays a role in pricing and investor perception. In summary, Rakuten's bond issuances serve as a crucial tool for the company's expansion and debt management. However, investors must navigate the risks and considerations associated with these bonds, from market and operational risks to bond ratings and specific bond terms. With a comprehensive understanding of these factors, investors can make informed decisions about Rakuten's bonds. Fade out. Transition. A soft panning shot of the Tokyo skyline at dusk lit up by the bright neon lights of the city, as the calming sounds of the city's bustling nightlife subtly set in. Fade in,